I'm Amy Anderson and you're watching OptionRally TV. Click the link to my right and get more information on OptionRally. So here's what's happening today, October 25th, 2013 in the market. Profit taking keeps gold going. Oil shoots up and down. And lastly, US releasing the core durable goods order statistics. Your profits are starting now. Gold futures traded lower during Friday's Asian session as traders booked profits in the yellow metal following a strong showing Thursday. Gold traded higher Thursday on the back of a key data point out of the U.S., the world's largest economy. In U.S. economic news out Thursday, the Department of Labor reported earlier that the number of individuals filing for initial jobless benefits declined by 12,000 to a seasonally adjusted 350,000. Analysts had expected U.S. jobless claims to fall by 22,000 to 340,000 last week. The disappointing claims number was enough to send traders into gold on speculation that a mounting batch of new jobs data will be enough to keep the Federal Reserve from tapering its quantitative easing program before next year, which then brought the price down. The longer the Fed keeps the quantitative easing program in place, the better it is for gold. As most opinions hold that the program is firmly in place well into 2014, what will that do for the price of gold? Gold closed yesterday at a high of $13.50 and has fallen to $13.43 continuing this morning. For yellow metal trading today, it is recommended to consider a call option when the price hits $13.50.20, to consider a put option when the price hits $13.39.40. Oil prices rose on Thursday after Chinese output data beat expectations, while soft U.S. labor market data kept expectations alive that the Federal Reserve will keep monetary policy loose, which further bolstered crude. However, this was countered by reports at the U.S. Energy Information Administration that said the U.S. crude oil inventories rose by 5.2 million barrels in the end of the week of October 18th, above expectations for an increase of 3 million barrels, stoking fears that the country is oversupplied in crude. As with most safe havens, as long as the Feds keep the dollar weak with their bond buying program, the better it is for oil. But how long will this last? Oil just closed at 97.18 yesterday, then settled on to 97.05 continuing this morning. For crude oil trading today, it is recommended to consider a call option when the price hits 98.25 and a put option when the price hits 96.52. Today in the market, the U.S. is releasing the core durable goods order statistics. This measures the change in the total value of new orders for long-lasting manufactured goods, excluding transportation items. Because aircraft orders are very volatile, the core number gives a better gauge of ordering trends. A higher reading indicates increased manufacturing activity. A higher than expecting reading should be taken as positive for the USD, while a lower than expecting reading should be taken as negative. The forecast is for it to be 0.5%. Tune in today at 1:30 GMT and get ready to trade the greenback. I'm Amy Anderson. Follow me Monday through Friday right here on my channel, at OptionRally.com, and on my Facebook page. See you next week.